All right, we'll go ahead and kick off. So good morning, good afternoon, and good evening, depending on where you may be in the world. My name is Sophia Arend, and I'm the Global Blockchain Business Council's Communications and Content Lead. It's my pleasure to welcome you today to the GBBC Virtual Members Forum. This is a bi-weekly webinar series we host showcasing the innovative work of our members around the world. And today we have the pleasure to be joined by a new GBBC member, ConsenSys, and their Director for Government and Trade, Shailee Adinolfi, and Guillaume, Dechaux, Global Head of Strategic Partnerships. They will be presenting and answering live questions from our audience on ConsenSys's evolution from startup studio to prominent software company, and discussing the real-world use cases they are developing and deploying across financial services, including CBDC and DeFi projects. Just briefly, before we begin, I'd like to introduce Shaylee and Guillaume. As I mentioned, Shaylee Adinolfi is the Director for Government and Trade at ConsenSys. She is an international development professional with over 15 years of experience working at the intersection of finance, technology, and global development. She performed business development, marketing, account management, and solution design as Vice President of BanQu, a blockchain-based identity platform, and at ConsenSys. She's also held a variety of leadership roles in projects related to payments, mobile banking, financial inclusion in emerging markets in the US. Guillaume Dechaux is currently Global Head of Strategic Partnerships at ConsenSys. He is also the founder of Trade Quorum. Previously, he worked as the Global Head of Energy Solutions Group, a Global Head at HSBC, and worked in commodity structured corporate solutions for BNP Paribas. We're so pleased to have them both here with us today, and we welcome your questions at any point during today's webinar. You can submit them in the Q&A box at the bottom of your Zoom screen, and we'll take them after the presentation. Thank you so much, Shaylee and Guillaume, for being here with us today, and we'll hand things over to you.
Great, thank you. So let me get started. Today on the agenda, we're going to do a quick intro to ConsenSys. Then Guillaume is going to talk about our work in financial services and various use cases. Then I will discuss CBDC offerings in context of what we've been working on. And then we'll have a Q&A. So ConsenSys is the leading Ethereum software company. We were founded in 2014 by Joe Lubin, who's a co-founder of Ethereum. And since then, we've been working with developers, enterprises, and individuals. We have many products and services that we offer, but the 5 main ones are Truffle, MetaMask, Quorum, Infura, and Codify. You'll see a little bit more about that shortly as we move on through the presentation. So we've seen some exponential growth actually in the past year, I would say, but we've worked with a number of different organizations. So from government to corporations to software companies like banks and nonprofits and startups. And we've had over 100 companies work with us on smart contract security and due diligence through our ConsenSys Diligence service. We have a developer toolkit in Truffle. We have Infura, which is a gateway to Ethereum mainnet and IPFS. Then Codify is our DApp application suite, I should say, decentralized application suite that sits on top of either your private permissioned Quorum, which includes Hyperledger, Besu, and Go Quorum. We just acquired Quorum from JP Morgan last year, and under the brand of Quorum, we oversee Besu and Go Quorum. And then Codify can also sit on top of Ethereum mainnet, so via Infura. I'm just going to skip this slide, but this is just to say we've been working a lot with developers and various different startups in the ecosystem over the past year. And we're starting to see this convergence between the private enterprise blockchain space and the public permissionless space, which is fantastic. I think people are finally starting to realize the potential and use of public mainnet for enterprise solutions. Some examples of consortia that we've worked with in these private chains is Comgo, which is a trade finance platform with 15 of the which was founded by 15 of the world's largest banks and corporates, starting in the oil and gas sector, looking at trade there, global trade. And then there's Covantis, which is a post-trade settlement and execution platform in the agriculture sector. And Guillaume can talk a little bit more about that as we talk about our financial services use cases. Guillaume?
Yeah, thank you, Shailee. So in this section, we're going to talk about blockchain and financial services, and we're going to split that conversation in two. First, we're going to talk about what we do with what the financial institutions or traditional financial institutions are looking at in terms of blockchain. And then we can have that discussion. We start talking about DeFi, decentralized finance. So I will touch a bit on that. So there was I don't know, Shailee, if you can come back to the previous slide, please. Yeah. So before we go through a few use cases, I think it's important to acknowledge the benefit of the blockchain, and I just wanted to summarize in some of the attributes of the blockchain and explain why it is fundamental to the future of finance. So blockchain is by design a record of keeping of all transactions. It can be defined as a source of truth by all participants and third parties on the network. It ensures the full auditability while preserving the integrity of each participant data. It brings additional questions obviously, which are more legal and regulatory, because some traditional actors are already or have already the obligation, the regulatory obligation, to be that sort of truth, in particular CSDs. But I won't enter into the details today because regulation will evolve over time. So blockchain networks are also programmable, which means that all the business logic and workflows can be defined into smart contracts and digital tokens. So the architecture defines the unique, authentic ownership of an asset. Also on a blockchain network, participants agree on the same standards in terms of security, but also in terms of data and messages between entities. So think about all the reconciliation that the finance is currently facing. There's not, probably apart from the messaging, probably with SWIFT today, there's not one standard in the industry. It can be in equity, in the bond market or different markets. There's no real standards in terms of data. And finally, the blockchain technology allows the digital representation of an asset through tokenization, its distribution in real time to the members of a transaction, and the instant DVP settlement through a stablecoin. And I think Shailee will talk about that a bit when we talk about CBDC. If you can go to the next slide. Shailee, next slide, please. Sorry. Yeah, that's it, the one. Sorry, no, the previous one. Sorry. So if we make a small step back and look what happened since 2016. So the first use cases were on track and trace. That's why we did this big project ORA with LVMH, commodities and trade finance, and particularly on post-trade. So they were the obvious use cases because the objective was mainly to anchor data on private networks, digitize workflows, and create network of nodes between participants. It was the first time that some competitors were able to work together on a network without sharing their data. So that was 2016, 17, 18. And if you look at the result, they have achieved that network effect and the adoption, but those platforms have not all succeeded in creating adoption. So I think we're lucky with Congo and ConsenSys. Some other trade finance platforms didn't make it, but also they're not yet using all the possibilities of blockchain, like tokenization. Then we saw a second wave of blockchain. If you can go to the next slide, Shailee. Thank you. So with the emergence of tokenization technology, a second generation of use cases emerged. So first, the CBDC, and Shailee will talk about it a bit later, but also with financial institutions, we saw new business cases in capital market, real estate, wealth management, and I will provide a few use cases after that. We've seen more use cases in custody of financial assets. Every single financial institutions wants to understand how to they will custody those financial assets and distribute it to the clients. But also we've seen the other large use case like the digitization of the bond market or in the asset management. And then we've seen a third wave of technology with DeFi. And here that's going to be I will present it a bit later. I think traditional financial institutions cannot ignore this revolution. And they need to take all their contribution. So if we look at how ConsenSys approaches enterprise financial services, first, we are creating a consortium and networks. And if you look at all the big platforms, it's always the basis for adoption of on the use case. If it's not centralized, it has to be on a global network which is going to be adopted by all the financial institutions. That's what we did for Congo. That's what we did for ConsenSys. But also our technology, like a Quorum, has been adopted as well by national institutions or countries, basically, or supranational networks like EPSI, which is basically Europe, or Alastria in Spain, or LagChain in South America. The other way to approach financial services is precisely on use cases. So we have, if you go quickly, next slide, I think, Shaylee, and then back to this one. Yeah, so this is our stack. Basically, I won't spend too much time on that. But the point is, if you come back to the previous slide, Shaylee, is that we have assembled ourselves all those modules that we developed, and we have made ready-to-use platforms in structured note, bonds, syndicated loans, or cash management for banks, or the CBDC sandbox that Shaylee will present a bit later. There's a new topic which is very hard for all financial institutions. Is they just don't want to focus on use cases. They want to develop their own infrastructure. And when I'm talking about infrastructure, is that they want to create their own issuance platforms for all types of securities. So they don't want to issue tokenized gold and then equities the next day. They want to be able to have all the issuances of securities on the same platform. And this is what we're providing. We're providing that infrastructure. And finally, we are, because blockchain is still in development, we are co-building some features with large payment providers or financial institutions. In particular, when we talk about privacy, ZKP, there was a big announcement with Allfunds recently. We're also working with some large financial institutions on the roll-up, which means to this technology which will allow high scalability, basically, on all the blockchain networks. If you can go to next slide. Twice. No. Yes, thank you, Shaylee. So just wanted to give a bit of perspective on trade finance, commodities, and post-trade. As I said, in 2016, 17, 18, trade finance, commodities, and post-trade were the first opportunities for blockchain. We created those big networks. We are anchoring data on chain, and we digitized workflows. But at the time, we didn't have tokenization. And this tokenization is allowing now a lot more use cases in trade finance, commodities, and post-trade. For instance, you can create a new commodities exchange. The large commodities exchange do not represent necessarily the local prices. It doesn't take a lot to create a new rice exchange, a soybean exchange, where you would tokenize soybean into a silo and distribute it to investors. You can, in terms of financial instruments, you can tokenize guarantees or other trade finance tools. You can tokenize assets for the purpose of the collateralization of some trade finance transaction. You can tokenize a risk participation agreement and distribute it easily to investors. You can tokenize reinsurances. we'll talk about DeFi a bit later, but there are more than $45 billion locked in DeFi today. And this is basically money available to finance small and medium enterprise, because where the return are generally a bit high and risk higher as well, and where we've seen more and more traditional financial institutions a bit more reluctant to in terms of COVID to finance the SMEs. And finally, we can issue stable coins and deliver make that delivery DVP, as we say, delivery versus payment. And as soon as the goods are delivered, then you can trigger the payment automatically in real time. Next slide, please. Wanted to provide just two examples out of many in capital market and global banking. Here we're going to talk about syndicated loan or sustainable finance. The issue with the sustainable finance is the risk of fraud. How do you know that the project that you're financing is really green and answer to the ESG standards? With blockchain, you can not only certify those data and the data that you that your project is really has really an impact on sustainability, but also you can tokenize the financial instrument itself. So we've built ourselves a bond and a sustainable finance platform which is available to all financial institutions, where they can issue SME loans, bonds, and distribute it to a large number of investors, retail investors. And as you know, it costs a lot of money usually when to do that. And here with blockchain, with a simple issuance, can be done in minutes. So that will democratize access to ESG finance to retail investors, and it also ensures the quality of projects. The second use case is a syndicated loan, and here it's the same mechanism. Basically, you can tokenize the loan as an asset. You can distribute it very easily and syndicate it to all the banks. So you can just distribute the token online. Basically, you can attach all the documentation to those tokens as metadata, and the smart contract will make an efficient service of the loan and an easy reconciliation for all the banks. Next slide. So this one is slightly more complicated. I'm not going to go into much details, but all the banks are now concerned about that they have several entities, and the reconciliation between balance sheet is a headache sometimes, and also regulators want more transparency around those balance sheet, the multiple balance sheet that the banks have. So we have created that coin, which is replicating basically all the fiat accounts of the banks, and diverted all the payment messages that happen during the day between all the entities to just exchange tokens between the entities, basically, and at the end of the day, just update the fiat accounts with all the balances of the account. It's a bit more complicated, but if you're interested, we can discuss about it. And then exchanges, they have been from the beginning very much involved in blockchain. So we built on our side liquid share for Euronext, and but also SGX, SDX, SIX, HKEX. They all looking at blockchain because companies remain private longer and longer, and it's very to issue equity for an SME is quite expensive. So they all trying to democratize this process and to create DLT platforms, basically, which are cheaper post-trade settlement for company shares, most of the time private shares. So we cannot finish this financial services section without talking about DeFi. And you may have seen the growth of the Bitcoin and the Ether of the last few weeks. The total market cap of cryptocurrencies is $1 trillion. So still very small compared to euro or dollars, obviously, but it's growing. And the next slide we will see after that the few market cap of. But just if we come back to sorry. Yes, exactly. Thank you. So what types of models are available in DeFi? First, you have automated issuances with atomic transaction running tens of billions of dollars. You have decentralized exchange performing matching and trading conducts around $1 billion per day. You have decentralized lending, whereas a smart contract look up value and provide new tokens like DAI, and they have already locked in almost $15 billion. So these are fully collateralized or over collateralized loan with no counterparty risk and auto balance using supply and demand economic on these token systems. Next slide, please. So DeFi has replicated multiple patterns in financial services and has significantly grown in parallel to fintech solution. The opportunity here is to improve the user experience and offer offerings for the retail and user without selling directly to enterprise companies and looking for exits in acquisitions. Initial areas of innovation like exchanges have expanded to banking and payment systems and abstraction to retail customers. Next slide. So I'm going to go quickly here because Shaylee will talk about the CBDC. It's just to show you that the market cap of those companies is close to the total is close to $575 billion. The money locked into DeFi is over $45 billion now. And so we'll send you the slide. If we just go two slides after, next one again. Yeah, exactly. Just to tell you before we go to CBDCs that there is one protocol today for every financial instrument and function. So on the left-hand side, you have the centralized finance, the traditional and finance. So from money, central banking, commercial banking to asset management, there is already some protocols in DeFi, in the decentralized finance world, which is replicating or improving the processes of decentralized finance. So it's time for traditional actors now to move to DeFi. Over to you, Shaylee.
Thanks, Guillaume. Okay, let me go to the next slide. Not sure what's going on here. I'll just go through these. We can share the slides with this group afterwards. So ConsenSys has been working on central bank digital currency pilots since 2017. We started initially with the South African Reserve Bank Project Coca, where we worked with 10 commercial banks in South Africa, as well as the Reserve Bank, to test it, to kind of reimagine the real-time gross settlement system. And we have there are some papers there that you can check out what the results were. We used Quorum for that back in 2017. And also with, we worked with the Monetary Authority of Singapore on Project Ubin Phase 2. As you know, MAS has been extremely forward thinking in getting their hands dirty and testing out different technologies with different providers. They've had, I think, 5 or 6 phases of Project Ubin, and they've really tested out, I mean, a number of different use cases and technologies, and it's really worth checking out all of their papers. Lots to learn there. And the technology has advanced significantly since, 2017. I mean, it's amazing. More recently, there's been kind of the second wave of central banks that we've worked with, the Reserve Bank of Australia, Société Générale with the Banque de France, looking at the digital euro, and the Hong Kong Monetary Authority, where with those three governments, we looked at the wholesale CBDC space. But then we started also working on cross-border with, just recently we launched, we are working with the Bank of International Settlements on the Cbdc bridge, continuing our work with the Monetary Authority of Hong Kong and Bank of Thailand. We worked on some retail use cases, looking at supply chain finance, working with banks and exchanges and things like that. And the Cbdc bridge, which I'll get into a little bit more, is kind of that next phase of that next iteration of like testing what the digital currency can do and how it will transform the different use cases that the banks and central banks have been kind of grappling with for decades. And this below is kind of our structure, how we see for the next few years, this kind of like infrastructure playing out. And there are going to be different service providers and solution providers along at the application layer. Then there's going to be the identity management players, the API to connect with the cross ledgers, right? Different ledgers. So you're going to have a number of actors coming together, and I think the governments are starting to continuing to bring different companies together to test. And so the Cbdc bridge, sorry, this is a blurry picture. I took it from the BIS website, but this is really interesting work that builds on the work that was done cross-border with Hong Kong and Thailand, but also bringing in now the People's Bank of China and the UAE, looking at multiple currencies and the swaps, the transaction between those multiple currencies and protocols and networks, right? So that it's really kind of taking this experiment to the next level. It just kicked off. We don't have results to show there. A lot of this experimentation is new. And Bank of Thailand just released their paper on retail CBDCs, which is worth taking a look at. But for ConsenSys, we are really working on the back-end infrastructure of this, where we've designed it to kind of be inclusive of that two-tiered model of distribution. So you have the reserves of the central bank, then you have your CBDC platform, and the commercial banks and payment service providers will continue to interface with individuals and small businesses and large businesses in the distribution chain. So there are different use cases that we're testing right now in our CBDC sandbox. And we think that, there is going to be a multi-ledger CBDC interface for governments where you have a diverse ecosystem, because you're going to have to, and we don't know what's going to play out, right? You have this kind of balancing act that governments are playing. They want to continue to spur the innovation in these countries, but they also are monitoring the exponential growth of stablecoins, cryptocurrencies, and the usage. And Hester Peirce, actually, from the SEC, put out a really interesting speech that I think she gave in the UK about how the US really needs to advance in their policy thinking. And she thinks it's going to be soon, this year, hopefully, because she said, we can't keep saying this is for bad guys. Like that the time has passed for that. If the United States wants to be competitive in the future financial rails, they have to get the policy act together. I think it's coming, but that needs some work. I'll stop talking about policy because I'm no policy expert, but this is what we think the future is going to look like in the near term. And digital currencies are going to streamline some of the payment aspects that we're used to from our traditional payment networks, right? And banks. Some of the back end infrastructure that banks have will eventually move into this sort of settlement of the digital currency on the ledger. And that settlement, it's going to take time for the interoperability, for the privacy to work out, for the scalability. The scalability, we've already tested, have some promising testing going on there, but it's still going to take work. So I'm not going to get too much into this, but we have a stack that we're testing with a number of central banks, multilateral banks, and governments, and payment service providers that we provide an API, they plug their wallet, or we can provide our non-custodial wallet, MetaMask, into this testing just so they can get their hands dirty, get an idea of privacy, scalability, the different use cases that they want to test out, and that's proven to be useful. So I think this year, more and more actors will start to test and think about how they fit into this new digital currency space and ecosystem. And we're doing the testing both using mainnet and private permission Ethereum networks. Most governments are leaning towards the permission networks. However, there are, specifically for bond transactions, you see governments they have started to test on Ethereum for several years. The World Bank did something, Santander. I believe some governments are thinking about, and banks, using mainnet for bond transactions. And I think soon they'll see the use of that cross permission to public, that anchoring on the permission chain, and then settling on the mainnet, that use case will come about very soon with digital currencies. So this is kind of what we have today in this multi-stack deployment for our digital currency solution. We are focusing a little bit more now on retail CBDCs, just because of the demand from different payment service providers and banks. But we continue to refine our approach with user feedback. And this is kind of what we have today, in case any of you want to test out your use cases. And the benefits are that you don't have to worry about the back end stuff. You can just kind of click some buttons, create your network, create your currency, and deploy and kind of manage it. We have monitoring of what's of the reserves and all of that thought through some feedback from governments over the years. It's not perfect, it's evolving. So we'd love to have your feedback and testing and I think it'll evolve through feedback. That's all we have for today. So thank you.
Thank you so much, Shailee and Guillaume. We've had a number of questions come in. I'll start from the top. Somebody asked, how should traditional financial institutions approach DeFi? And can you give an example of some of the use cases?
Shall I take it, Shailee?
Yes, please.
Okay, easy one. All right, there are several answers to that. I think clients of traditional financial institutions will or are already using cryptos. And one of the main topic for banks is to understand how they will custody digital assets that they will issue themselves, but also how they will custody the cryptos of their known clients. And so that's one topic that all the financial institutions are looking at now. But if we look at payment, for instance, so everybody knows that WorldPay, for instance, the payment processing company, you can replicate that already with, if you go to MetaMask, for instance, which is our main wallet, and which has more than 3.5 million users. You just go on our, you can use your wallet on your mobile and just buy and cryptos or exchange cryptos with the swap application, transfer your some cryptos. So this is reinventing already the way payments is doing. If you look at core banking and deposit and saving, so you have the core banking solution like Jack Henry, for instance, providing deposit and saving. is now, if you look at Maker, for instance, is now encapsulated in simple interface for depositing a stable coin and earning interest. So I give you several answers here to say that traditional businesses are replicated already in DeFi. And the most important for those traditional financial institutions is to look at their client and what they're looking for. So it was a bit a long answer.
No, thanks so much. And for those of you who asked, we will share the slides. And I know Guillaume had a helpful slide, several helpful slides on DeFi and kind of showing what he just mentioned. So somebody else asked, what are the advantages of using Ethereum for CBDC? Maybe you can highlight a few key points. And then they also asked, are you mostly using Quorum in the CBDC projects?
Yes, so the advantages of using Ethereum, so enterprise Ethereum, we're mainly using Quorum, Hyperledger Besu specifically in our testing. I think the advantages are the easy transferability to mainnet. That's why many governments are coming to us. Is that experience from the growth of Ethereum over the years and bringing that into the private networks. And also that there are also just more developers in the Ethereum ecosystem, over probably 400,000 at this point. And so that helps, that feels better to governments knowing that they can go from one vendor to another and that they're not, you know, they don't have that vendor lock-in, that there is a growing ecosystem in Ethereum and lots of innovation happening. And if you don't mind me sharing my screen, I can show you a roadmap of what's happening with kind of Quorum and Hyperledger Besu. So late last year, we acquired Quorum from JP Morgan, and we developed Hyperledger Besu and donated it to the Hyperledger Foundation. That was like a year and a half, 2 years ago, right? So 2019, and then we are kind of bringing all of that together to provide a holistic enterprise client, private client to the Ethereum space. So we have both the Go-based and Java-based versions of enterprise Ethereum. That's kind of like the roadmap, and we continue to evolve. We're continuing to test out like privacy features, scalability, etc.
Thanks. I hope also for the person who asked, how has Quorum evolved or changed since coming under the ConsenSys umbrella, that helped illustrate that point and the roadmap. Shaylee, another question tying into CBDC. Someone asked about interoperability for CBDC and what ConsenSys is doing there.
Yeah, so what's interesting is I think there was a request from a government to start to design interoperability between Ethereum and Tezos. There have been requests from multiple governments on the interoperability between Ethereum and Corda, and then also with Fabric, right? So we are continuing to design and test these things. I mean, it's really still early days, but that conversation is already, and request and demand from governments and banks is already there. So it will take time, but it's going to happen.
Mm-hmm. Somebody also asked, from a policy and regulatory viewpoint, what do you all see as the biggest threats and or opportunity for the blockchain industry?
Guillaume, I would love to hear your thoughts. I think providing clarity to the sector is useful, specifically for the bank's participation. But I think holding the industry to some of the old regulations that don't fit the new thinking is really difficult. So if the regulators can allow us to continue to innovate and build on the technology, and really just see for themselves how it works with governments, with banks, with various industry participants, that would be great. So providing clarity, but not over regulation. And there's a number of different areas. I think, and I'm not the expert on this, but you know, there's a conversation right now with FinCEN, or I think it's FATF and the non-custodial wallets or non-hosted wallets that's happening. And I think there's some feedback coming in from industry. But Guillaume, what do you think?
Yeah, I think To add to what you say, I think the regulators have made a lot of progress. We've seen that the OCC at the beginning of the year authorized the payments through stable coins. I think the next step is around the securities, you can issue a loan easily, and you don't have any regulatory issues in digitizing, tokenizing a loan. But there are a lot of regulatory approval when it comes to securities. And certain intermediaries like CSD have some regulatory duties in terms of source of truth. And I think the next step for the regulation is to maybe to authorize that some digital platforms could be as well the source of truth alongside with the CSDs or by themselves. And I think this is, from my perspective, the next challenge for regulators.
Thank you. Okay, apologies. So we had another question. Somebody asked, how do you convince traditionally very sensitive and private companies to operate on the mainnet? How does ConsenSys address privacy concerns? I'm
happy to take a shot at that. Yeah. So most consortiums that we've been building are on private networks so far. If you look at Congo, ConsenSys, Aura, they're all on private networks. Technology is still evolving, and a lot of banks are now looking to go on the mainnet, but they require high scalability. So on private network, we can process between 1,000 to 2,000 transactions per second. Now, what they're looking for is to go to mainnet to achieve potentially 30,000, 40,000 transactions per second. And this is exactly what we want from what the payment providers are looking for. Second thing is indeed privacy, and there's what we call the ZKP, Zero Knowledge Proof technology, which is also evolving. I won't go into much details here, but there's several types of zero knowledge proof, and some are more advanced than some others. And for some of the use cases, it's not they're not ready. So we would not advise all financial institutions to go to the mainnet for the time being. And in terms of privacy, security, sorry, I think it's the mainnet now is very secured. So if you have scalability, privacy, and the security, so this is the objective. I think in terms of privacy, we'll need probably another year or two to have the final solution.
Thank you. We're coming up on the hour here, and just to wrap up, I wanted to ask if there are, ConsenSys has a number of projects and verticals and is on the cutting edge of many of the developments in the blockchain space. To give you all the final word, what's next on the horizon, and what should we keep an eye out for? And
I think like continuing, well, DeFi is very popular right now, and NFTs, and I think CBDCs will continue to be popular, but the use cases that we talked about will continue to grow and change over time, like trade finance. I think anything with digital, anything with tokenization, I think is going to be become popular. Guillaume, what do you think?
No, I agree. I think the emergence of digital currencies will happen in the next 2 years, and around that there will be a new ecosystem of use cases, and that will be the trigger for the mass adoption.
Thank you so much, Shaylee and Guillaume, for joining us today and for answering so many of the audience questions. We will share a link to the ConsenSys website, where there are a number of very helpful resources to learn more, as well as the slides and a recording of today's presentation. Thank you all for your insightful questions, and to our presenters. Till soon, we will be back. We host this every other Thursday. So you can follow the GBBC for links to register for the next members forum. Thank you so much.
Thank you. Bye.